Hey, what's going on, everybody? Just finished up a really cool video with a friend. He's new to trading, so I showed him a couple things in TradingView. We did a quick Zoom call right before football. So I'll try to do these maybe once a month, twice at the most. It's not something I'm looking to do at all, but he asked me. He's a really good friend, so we went ahead and knocked out a quick Zoom session, and I think it's of value. So if you found it helpful, don't forget to hit the thumbs up, subscribe if you haven't, and most importantly, share it with a friend because I really do think it's something that all new traders can learn how to use. So I hope you guys enjoy it.
All right, cool. So you should have a notification telling you
Yeah,
that we're recording. So we'll go for like maybe 20 or 30 minutes. It's Sunday, and
sounds good.
Tom Brady's playing soon too. So we're gonna go over a
Okay,
couple,
okay, yeah,
a couple.
you're the good guy.
You
Not
already
me.
know. You already know. You already know. Um, okay, so just tell me where you are in like your trading, how much you know, and then we'll go over what I think are two of the most important things about trading. So,
I
uh,
mean, I've been honestly all over the place, bro.
yeah,
Trying to find some strategies, trying to what's it called? Write down the trend lines and trying to see
yeah,
if it's uptrend or downtrend. Uh, I kind of wanna understand like how do people find those stocks before they
yeah,
go the way they go. You know what I'm saying?
right, right. Um, okay, so there's two things that uh, I think everybody who trades has to know. And let me know, is it loud in the background because I have my headphones on? But the kid is over
That's
here.
perfect.
Okay,
Perfect.
cool, cool, cool. Just making sure. And first of all, let me just because I think I'll end up posting this on YouTube. Paco is
Okay.
a great friend of mine, long time. I don't know how many years we've known each other, but um, you know, we were introduced through mutual friends, and he's just a solid guy, as solid as they come. And he told me after I started posting on my Instagram about trading, that he wanted to learn, and he wanted to, um, just learn how to trade. Everybody wanted to learn how to trade during COVID, so um, I
Yeah,
post.
it's funny that how I was texting you the first time. I'm like,
Yeah,
hey man.
yeah, big time, right? So,
Yeah.
everybody wanted to learn to trade, and I'm really apprehensive. You know, um, it's hard to teach people how to do anything. It's really hard to teach people how to trade. Trading is very difficult. So it's not something that's easy at all. Um, and so he stuck with it. And I'm hold on 1 second. Of course, he asked me for something. 1 second, but no. Can you go over there though, buddy, please? I'll make you peanut butter jelly in 20 minutes. Okay. Okay. I'm sorry about that, man.
You
All
want
this will
some
finish.
protein?
I
You
know,
want
right?
some protein? You want to get big already? Oh,
It's funny, man. So you stuck with it, and I'm really apprehensive about teaching people anything because trading is one of those fly by things. It's like people do it when it's fun and when everyone else is doing it, and it's really hard to do. So you stuck with it, and you're still sticking with it. So I'm more than happy to help you, and just show you
yeah,
just kind of like
appreciate
some
you, man.
some basic stuff, some basic ways of how I trade and how I learned to trade. So um, there's two things that are very important when trading, um, and the most important. First is risk management, and the second is market structure. So you really very very rarely. Um, I'll go over market structure first. You very
Okay.
rarely hear me trade like counter trend or the opposite of the way that the market's going, or reversing something that is completely going up. And I'm not trying to play the downside. We're momentum traders. That's all options trading is trying to catch momentum.
I
So
got
I'll give you just an example of how, just what market structure is. And there's really only three kinds of, directions that the market can go. And so I'll draw those out. So you got, I'll do this, market structure. And you can see my screen fine and all that, right?
Yep.
Cool. So we got bullish, market, maybe that's too small. So we got a bullish market.
Yeah.
We have range bound, also known as chop. Jeez, man. Range bound, chop. Put that right there. Bullish market. And we have a bearish market, which is what we're in right now.
Yeah.
Bearish market. All right, so these are really the only three types of markets that we have. It's really the only way the market can go. So you know what I wish they gave me a blank canvas on TradingView to work with, but they don't, so it's fine. Hold on here. Whatever. All right, so we know what a bullish market looks like, because this should say bullish.
There we go.
There it is. All right. So we know what bullish looks like, right?
Yeah.
All right. This is.
Yep.
So that's the bullish market. Do you understand higher highs and higher lows?
Higher highs and higher lows. Yeah.
All right. So. All right. Just because we're recording this, we'll change. So we had higher highs. All right. And we have higher lows.
Yep.
All right. Higher highs, higher lows. Okay. So
Yep.
if you knew, if the only thing you knew about trading was higher highs and higher lows, where would you make the most money?
On the bounce.
So we'll define the bounce. Like what would the bounce be? Would you buy at the higher low? Or would you buy at the higher high? If you were trying to buy calls,
I would buy the higher low.
Right. So you'd buy the higher low. So if you knew absolutely nothing else, you opened up Robinhood and you said, I'm going to buy Apple 160 calls and it's down here at 155. You buying down here gives you a significantly higher chance of profiting from that trade, like significant. If we're talking about a bullish market, uptrends, no matter the time frame, 15-minute time frame, 1 hour time frame, 5-minute time frame. If you buy at this higher low here, or even a little early, if you bought, here, right? So you just bought right here.
Yeah.
It's a little smaller. You have a significantly higher chance than buying at the higher high. So understanding market structure is the most important thing when you're trading, and I'd say is where everyone should start. You got to start at the basics, and this is the most basic as it gets. Higher high, higher low. understanding this pattern, maybe even on a larger time frame, 4-hour time frame, 8-hour time frame, 1-day time frame, so that you're not faked out by certain things, by a 2-minute candle, you know. Range bound, right? Avoid this.
Yeah.
You shouldn't. You know, at least now, you know, there's no. As a new trader, there's no way to play this and be profitable, because you just don't. You know, it's hard for you to understand. I guess in theory, you could buy at support, sell at resistance, buy at support, sell at resistance. So I guess, you know, I guess there is a way to play it.
You know better than me. That's not that easy.
Yeah, for sure. But if you can identify, like, here, we'll go to we will go to let's go to a Netflix chart. All right, and let's drop to the daily. All right. Oops. And Netflix is range bound for a year almost, right?
Yeah.
So look at this. Doesn't this look exactly like what I just drew?
Yeah.
This is range bound activity, right?
Yeah.
You know, so if you just imagine for a year and a half, you drawing this zone, so you probably can't start until you get, you know, like maybe like right here, right? Because you got action here, tested back down here. You got action up here, you tested back down here. So if you've been keeping an eye on it, if you kept an eye on it from July to September, right? Two or 3 months. Okay, you say, well, you know what? It rejected here. I'm going to take a shot at a short. I'm going to buy, so this is at 553. I'm going to buy a $500. I'm going to buy a $500 put, expires 3 weeks out, right? I want to pay $1. And this is how you should trade. You should, you know, I don't know what size trading account you have, and I'm not going to ask, but, you know, let's just say you're trading in a $2,000 account. You know, you should be looking for trades that are $1 to $2 and nothing more than that. And this will give you, it's easy math. You know, when you're at 50%, you know, when you're at 100%, you can look at the contract values. You don't have to do a bunch of math. It's very simple. It's very easy. Buy $1, $2 contracts if you have a $2,000 account, and buy a couple of them on different names. Okay. You know, and that's how you should trade. You shouldn't, you know, people have $2,000 accounts and every trade is $2,000, and then they smoke that account and it's gone. They don't have anything else. You know what I mean? You know, it's about, and this is the part of risk management that I talk about. You know, especially and you're talking to somebody who's blown up multiple accounts, you know, 6-figure accounts. And this is the only way I'll ever trade again. You take a defined amount of your portfolio and you allocate small pieces to it, so that one trade doesn't wreck your entire portfolio. You know, you can't lotto your entire main trading account.
Because then I feel like it gets even more harder on you to learn and to execute, because your brain is already thinking different, maybe.
Exactly. You've lost the money and now you're trying to figure out how to get it back on the next trade.
Yeah.
Right. So it's you know, you save yourself a lot of heartache when you trade with a $2,000 account, and every trade is $1 to $2. A lot less heartache when you do that. You know, $2 isn't going to kill your $2,000 account, but $2 on, and you just saw what Netflix did. So Netflix here went from 550 all the way down to 467. It's a $90 move, right? So if you buy $500 puts, you know, you're already in the money here. Now that $1 turns into 5,000 if you held all the way, because you know it's going to come back down here because it's came down 1, 2, 3, 4 times. So you bought here, right?
Yeah.
Hold on, let me grab the right tool. You bought here, right? And you bought for $1 because you're 50 points out of the money. $1. 5. And let's see when this started, October 14th to November 9th, right? So it's 3 weeks. So and you sold, and this is obviously we're running this back because we know how it plays out. But again, if you play this enough, you know, I can short here. I can afford to lose $100 out of my $2,000 trading account, right? Because my risk to reward is huge here. It's tested this level 4 times already. So I'm okay spending $100 out of my $2,000 account to find out if it's going to come back down to 460, 470. So now your risk reward, now this $1, right, comes down to 467. Again, this is a perfect scenario. Let's just use round numbers. We'll say you sold it 470. So from 550 to 470, $80 move. We have $500 puts right here. I'm trying to go very slowly. Let me see. So $500 puts here. We're in the money at 500, and it made it all the way down to 470. You're probably looking at bare minimum. This contract turns to $2,500 by the time it expires. So you bought a $500 put 3 weeks out for $1, and you sold down here. And this is for anybody who's going to be watching this later. You know, it's now a $25 contract. And I will just simple math, whatever, $25. So you know, so you know, and this is how you trade. Well, you know, $1 turns to 25. You know, $100 to $2,500. So it's
that's a good risk to reward right there.
That's great risk to reward. There's no, you know, but you do this by understanding this, right?
Yeah.
Short at resistance, buy at support, and that's how you play chop. You know, and I know I just 5 minutes ago I told you to play the bullish structure, but again, if you're going to play range bound action or chop, this is the way to do it. And
you said,
go ahead. Mm-hmm.
It depends on what market we're in.
Yep,
you got to adjust to that.
You have to understand the market. So same thing with bearish a bearish market. You know, everybody knows that I play the downside probably better than most people play the upside. I'm much more comfortable playing the downside. I make a lot more money playing downside action. But you know, it's one of those things where you have to be skilled at it. You have to understand it. And I play both ways. It's just this playing a bearish market is so much faster than it pays so much more than a bullish market, depending on the environment, because it's so fast. So we have lower highs and lower lows, right?
Yeah.
So, and I'll give you an example of that in a minute too. Lower highs. All right. So same thing. If I open up my brokerage, and it's the same thing with a bullish market structure. If I open up my brokerage and I say I'm going to short the lower high, this is you have a significantly higher chance of profiting taking a short position here than you do down here, because we know it's going to bounce. So you have to identify the market structure. What environment are you in? And once you identify that, you're able to identify the pattern and play it from there. So we'll look at SPX, and we'll just look at the hourly. Okay, this is a real life scenario. Let's find a better example. Well, a much cleaner one. 4 hour. Okay, we can use this one here. That's fine. All right.
That's Apple.
Yeah, this is Apple. Here, let me turn on the watermark here. All right, so we have an Apple on the 4 hour. Real life. Hold on one second. Obviously, he doesn't respect what I'm doing right now. All
He's
right,
ready
hold
to
on.
go. He
Man,
wants a peanut butter sandwich.
I know. All right, so lower high, lower low, lower high, lower low. I mean, this is textbook as it gets, right? So we're on Apple on the
Yeah,
4 hour. Here you've identified, we're in resistance here, right? This is Apple's all-time high, right?
yeah,
So we've identified Apple, this is being the top for Apple, this is the lower high, and maybe you took a short position here, and you don't know where it's going to stop, but as soon as you recognize the reversal, did I do that right over here? I don't know. Yeah, I did. Okay. So we now have a lower high, we have a lower low, we have a new lower high. Again, this is a real world example. It's not as pretty as the fake one that I drew, but now you have. But see, now that we've blown past
yeah,
this level here, we have a new lower low, right?
yeah.
So we don't know where this is going to end. It could end down, right? Oh shoot! It could end down here, but it's still a lower low. So you can, whenever you can identify, maybe you take it on, maybe you take it today, or I'm sorry, on Monday. Maybe you buy calls, because eventually we're going to have a lower high. We're going to have a new structure, or I'm sorry, a new move to maybe make a new lower high, right?
Yep.
So as long as we don't break above, this here,
That means we're still on a downtrend.
we're still on a downtrend. The minute we break above this, we no longer have. This is called a trend change.
Okay.
So we now have a 4-hour trend change if we can get a 4-hour close above this lower high right here. Does that make sense?
Yep.
So you buy. I'm not telling you to do this tomorrow, but identifying it is going to help you become a better trader. You identify where we're going to pivot, whether it be here, wherever it's going to be. We're going to have a bounce day, and it could come this week. I don't know when it comes, but we're going to have a bounce. I just made a video about that. It's in my weekly watch list. It's posted on YouTube now. We're going to have a bounce, and whenever we have a bounce, you can at least play up to the lower high. You get what I'm saying? So you open up your Robinhood or whatever brokerage you're using, and you say we're at Apple 157. Maybe it gets to 157 tomorrow, right?
Yeah.
Who knows what happens, but
Who knows?
right? Maybe we open up way up here. You still have room to the lower high to continue to at least get to here. So say you buy 2 contracts expiring in 2 weeks. You buy the let's see, this is 157. Let's say it gets down to 157. You buy 160 calls expiring in 2 weeks, right? Boom. You buy right here. Buy 160 calls. Let's put a number on it. You're gonna pay $2. So you have a $2,000 account. You're gonna buy 1 contract, or however much. It's your risk management. You're gonna buy 2 contracts, 1 contract, whatever you're gonna buy. You're gonna spend $200 to find out if Apple can get to 160. Apple pivots hard. We now have green bar after green bar. We're coming up on our trend change. We got a gap up for the next 4 hours. We're now at, what's the top of this bar? 170, right? So this $2 contract now turns into a $10 contract. Because you understand intrinsic value. It's your strike price, and whatever's in between that. So if this bar is here at 170, you have $10 of intrinsic value, right? So you now have that $2 contract is now worth $10. So $200 to 1,000 on a reversal, and we have all the way up to 177 for a trend change. So now maybe you start taking some money off the table. Well, you can't because you've only bought 1 contract, but this is how you build your portfolio. $2 turns to
So
$6 or $7. You've only bought one contract, so you can't scale in or out. But it's identifying that
yeah.
we need to bounce at some point, and maybe we get to maybe we do get to just right here, right? Maybe we get right to 176, 177, and then we pivot again and we head back down. And so we're still in a downtrend. But again, you're going to be significantly more profitable by buying lower highs than lower lows, or in the case of SPX, or in the case of a bullish market structure, higher lows versus higher highs. People buy up here and get wrecked all the time just for it to pivot and come back down here. Happens every day. I'm sure you've seen.
Yeah.
I don't know what trading group you're in or whatever, but people buy higher highs all the time because they don't understand market structure. And this is the most basic of understanding how to trade. This right here. You got to understand higher highs and higher lows. If there's nothing else you understand in trading, and there's people who've made a living off of just buying levels. They don't understand this is technical analysis. They don't understand anything in depth. If I pull a fib and you hear me talk about fibs all the time, I'm gonna buy at the 0.5 because it remains bullish. It's good at these levels, these patterns help you identify your entry.
Yeah.
That's all this structure means. Then you get more advanced and you get into Fibonacci's but this here is the easiest way to enter, followed by, falling wedges, one of my favorite patterns, that you can possibly.
So when you
learn.
do your watch list or whatever, like what time frames do you usually look at?
So I always start at the daily. I'm always going to start at the daily time frame. Gives me a bigger, it gives me a broader picture. I don't have to, I don't have to chase, 15-minute candles, 5-minute candles. Like, look at all this action. Like, it's good. Like if you bought, I'm a big guy on EMAs, the ADMA. You lose the ADMA, but the 5 minutes just gives me too much anxiety. Look at these wicks. I'll probably get faked out here. I get faked out here. I get faked out here. Oh no, look at this one. This one closed way above. I've lost a ton of money now. I had 100% contract and I didn't get out. It double topped here and then it just went back down. That's too much for me. So I start at the daily and I go to the hourly. I'm very simple, Paco. Like I'm as simple as it gets. So I'll start at the daily and then intraday. Like in the middle of the trading session, I'll get to the 1 hour. So that's how I trade. And I can find my levels on the hourly in the middle of the day, usually by starting on the daily and watching what happens pre-market. So if I can map out my zones on the pre-market, map out what the high was of pre-market, map out what the low is of pre-market, then I can determine my range for the day. Because I always want to know what happened overnight, and if there's a wide enough range, then you can play those. You can play higher lows. You can play even the range bound stuff, the chop. So if Apple opened, forgive me for all the sloppy notes, but if Apple pre-market bounced around from here, where's my tool? Here, and it went up to here, and opened up right here. I can, if I know my range, I can kind of play that. I know if it busts through the pre-market range, I can jump in calls because it's probably not going to come down. There's news, there's a catalyst, there's a reason why it broke its pre-market high. It's pre-market high. You get what I'm saying?
Yeah.
But just as a new trader understanding how to trade, I would say start, or at least trying to become profitable. Stick to higher highs and higher lows. Wait for a bull market. Learn how to trade a bullish market before you learn how to trade range or a bearish market, like down here. That's where I would start. I'd wait for it. It's not here yet. We're gonna get a. And again,
I was just gonna say, I don't think.
Yeah, it's gonna come. There's, we're really oversold. Look at these candles. We've had 5 days of selling. There's a bounce is gonna come. I don't know when it's gonna come. It should be soon, but how much more to the downside do we have? So these are all, look at these candles here on the daily. What is this right here? What's this?
Downtrend, lower
Right.
lows and lower highs.
Right. So this is a lower high. This is a lower low. This one here is a lower high. This is a lower low, lower high, lower low,
Yeah.
lower high, lower low. We're going to have a pivot at some point. One day, and I just talked about this. One day we're going to have the fattest green candle. You'll see. It's going to be a huge candle. People aren't going to believe it. They're going to try to short it. They're going to get smoked. These things, you know, we're oversold. RSI at 25. Buyers have to step in, even if it's just to make another lower high. There has to be a bounce. So wait for the bounce. And when we do get a bounce, just watch it. I'd say play the stuff that's liquid. Play Apple. I'd stay away from Tesla. Play Facebook.
Oh, yeah.
Facebook and Apple are probably and SPY. If you can play those three, find $1 contracts and just watch the lower high, lower low patterns. You know, on the daily. Don't buy weeklies. Buy 1 week out, 2 week out, 3 week out contracts. You know, just find the stuff that's in between $1 and $2, just for learning purposes, and just watch how they move, and use the daily, use the 4 hour as your guide, for when the trend changes. Right now we're in a downtrend until the trend changes. You know, here I'll show you what a trend change looks like, and then we gotta wrap it up. You know,
Okay.
the kid's peanut butter sandwich is ready.
Yeah.
So let's see.
Just gotta feed him.
Yeah, man. All right. So we'll go back to Tesla on the hourly. So this is a falling wedge. This is another, you know, after you master higher highs and higher lows, start looking for falling wedges. They're the second most profitable, in my opinion, trades that new traders can take. They play out a lot. They're you know, but this is a trend change right here. So you look at this here. Turn off some of these indicators. Lower high. All right, and then lower lows. So, I mean, you can kind of look at, you know, you can see where this is going, right?
Yeah.
So you have, we'll do a smaller one here. We'll use this here. You have a trend change, so you have a lower high here, lower low, lower high, lower low, right?
Yeah.
Okay. And here, so now that you have 3 touches, 1, 2, 3, right? Because it takes 3. This is a trend line. It takes 3 touches to make a trend line. 2 touches is just a line. Oh no, so I need to do. Hold on. All right. So you have an hourly trend change the minute it breaks this 3rd touch here, right? So the minute you got higher than these touches here, the minute it closed over here, now you have an hourly trend change. And that's what you're looking for. You're just looking for trend. You're just looking for trend changes, and that's where you find your exits. So if you were short here the whole time, if you were short from what's that, 1165, right? And all Apple and all Tesla did was make lower highs and lower lows, right? So boom. I gotta get better at these drawing tools. Boom, 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 boom. The minute it broke here, the minute you got over here, you're out of this trade if you were short. So you went from 1150 down to, you know, 885. And now you flip bull. So the minute you get a trend change, now you can play calls. So we have the 1 touch, 2 touch, 3 touch, 4 touch, 5 touch. The minute it breaks to the other side of this, right?
Yeah.
Now you flip bull. You have an hourly trend change and a big one too. You know, big gap up, boom, run all the way back up to, you know, $1,100. But it starts with higher highs and higher lows. You gotta learn that first.
Yeah, that's what I've been.
So I identify them. Start on the big names. You need stuff that's liquid. You need stuff that moves and it's gonna move. If Apple's not moving, don't play Apple. Look for mega cap names. You know, the Facebooks. I'd say start with Facebook and Apple, and just wait for them to move. You know, it's a long, boring process, this trading, but you gotta start somewhere.
Yeah, exactly, man.
You know, at some point, you know, you really don't even want to day trade it. At some point, you want to be the guy who, you know, looks at a daily chart, goes to Netflix, and this is what you want to do. You want to be this guy here. You want to be the guy that buys $1 contracts and doesn't have to open TradingView again for a long time, because you've seen this pattern play out before.
Exactly.
But in the meantime, while you're learning, you can, you know, you got to go through these things to learn how to trade. You have to go through a ton of different scenarios. Hell, I'm still learning. I learn every day. So
I bet.
You know, no 2 days are the same. So yeah, man.
Definitely, it's something new that, you know, it's challenging, but if you master it, it's fun.
It is, absolutely. Yeah, it's no fun losing money, but you'll look back on it like I needed to learn that lesson. I need to learn how to do it. But start here. Start in the bullish market structure. You know, we're gonna have it eventually. It's gonna come, and learn how to play higher highs and higher lows. You know, again, here's your entry here. Here's your exit. You know, eventually you can get above this higher high, and just play those and be happy with profits. Be happy where you see profits and take them. So.
Oh yeah, I mean that's what I was gonna ask you. So like when you play with one contract, you should like just once you see some profit more than like 20%, you just get out.
Well, everyone has a different risk tolerance and different goals. Like my goal is maybe different from yours. When you get a little bit more advanced, you'll understand where your sell is. Again, you're in this case. I'll use this as an example again. Your buy is at the higher low. You're looking for a reversal at the higher high, so that's when you should sell. So again, if we're on the daily, I'll use. Let's go back to Apple. Let's find an uptrend on Apple. All right, so here's a good one. You bought here, right? You see this? Yeah. So understanding candle structure is also important too. I didn't have time to go over that. I'm sorry. This is a double bottom here. So you got a long tail, double bottom. This is your higher low. Higher low. This is where you would buy because you've identified the uptrend now. Here's your higher low, higher high, higher low, higher high, higher low, higher high. You've identified this now. You know you've seen this. Right here. It starts here. You've seen this enough. So higher low, higher high, higher low. Boom. I'm going to enter here. I now I've identified the pattern now. So now I'm going to take a shot. So as long as we get a close above 122, I can continue this. You're going to get good at identifying when to exit. Me personally, an exit would have been, I would have started to look at this big upper wick here on the daily, and you get a close below the 80 EMA. This lets me know that the next higher low is coming. Okay. It's a lot more advanced. Higher high. But you're looking for an exit when the reversal comes. So remember, you bought way down here at 112. You're way up here at 124. You know, this is a 400% trade somewhere. You know, you don't need to sell ridiculously early because you know you're if the pattern is going to continue, that you're going to get at least above 122, right? You bought down here at exactly. You bought down here at 114, right? This is your entry here on this day. You know, you get 1, 2, 3, 4. You're gonna get a whole week of buying. You don't need to sell as long as you're above a higher low. So maybe your exit is, you know, this was your target 122 because you know you're gonna at least make a new higher high.
Yeah.
Maybe your stop is a close below that. So you get above it, you know, now you're starting to take some risk off because you know a higher low pattern is coming. I'm sorry, a higher high is coming. And it's gonna, you know, make a new higher low. So you have to you got to find an exit somewhere. So, you know, as long as it's you know, you get a daily close above 122, you should start looking for an exit. You know, maybe squeeze some more out of it, but you've made more than 100% on this trade here. You know, so if you're playing more than one contract, you know, most of your position should be out heading into 122. You should be out most of your contract around there.
Got it.
Okay.
Yep. Oh, I'm about to go and look for some higher highs and higher lows right now.
That's it. That's all you can do.
Yeah.
That's all you can do. Find those patterns, man. Find them, send them to me. Watch this video back. I'll email it to you. It'll
Definitely.
it should help you. It should help your trading. So, but yeah, and just text me. Let me know if you have any other questions. And looks like the Rams are up 3-0 in Tampa Bay.
Game
Gotta
is
run.
on already.
Game is on, brother.
All right.
Hold on, bud. Nothing, buddy. I'm coming over there now. All right, man. I gotta go. I've been called.
I got you.
All right, brother.
I got you.
I'll send this video to you shortly, and then yeah, just try and identify some patterns.
All right. Thank you very much, man.
No problem, dude.
Have a good one.
Thanks, man. You too. Later.